Welcome back to the BJJ Lender, y'all. The show where we bridge the gap between financial health, physical wellness, and mental fortitude. It's your boy Sham, and today we're diving into a topic that's essential to financial fortitude and holds near and dear to my heart because this is how I started the industry, life insurance. But we're not just scratching the surface here. We're breaking down the major types of life insurance: whole life, term life, and index universal life, or the IUL, and understanding how each are beneficial depending on your stage of life and financial goals. Now, I know insurance can sound intimidating. Just stick with me. Just like a jiu-jitsu match, your financial wellness means having the right game plan. And that starts with understanding your options. So let's get it, all right? All right, let's kick things off with the simplest and often the most affordable option, term life insurance. Think of term life like a white belt in BJJ. It's straightforward, no frills, and serves a specific purpose. Term life is designed to cover you for a set period, typically 10, 20, 30 years. It's perfect for people who want affordable coverage while they're raising a family, paying off a mortgage, or building their career. You pay a set premium, and if something happens to you during the policy's term, your beneficiaries receive a payout. If you outlive the term, it simply expires. When is it ideal? Here are the pros. Early stages of life. Think your 20s or 30s, when financial obligations are stacking up, but your budget might be tight. You've just started your career. Maybe you're married, or you recently had kids. Your main goal is to provide security for your family. If something happens to you during this time of building wealth, critical time of building wealth, low premiums, simple, easy to understand structure. Now let's dive into the cons. There's no cash value. It's like renting insurance. You don't get anything back if you outlive the term. For anyone at the start of their financial journey, this is a great way to ensure your loved ones are protected without breaking the bank. Now, as you get further along in life and start to accumulate wealth, you might want something that offers some more stability and longer-term benefits. Enter whole life insurance. This is like earning your purple belt. You've got some serious financial chops now, and you're thinking long-term. Whole life insurance is permanent. It doesn't expire as long as you pay the premiums. But here's where it gets interesting. Part of your premium goes towards a cash value component, all right, that grows over time. It's like building up your savings with tax-deferred earnings. When is it ideal? Pros. Here are some pros of when it's ideal. Mid-career professionals or those in their 30s to 50s, you've got a solid financial foundation, all right? And you want to protect your wealth while also growing it. You're thinking about legacy planning, wealth transfer, and long-term security for your family. Here are some cons that come along with whole life insurance. Lifetime coverage. You're covered no matter what, yeah, but when you pass away, it builds cash value that you can borrow against or even withdraw later in life. The higher premiums compared to term life, the growth rate on cash value can be slower compared to other investments. This is the policy for those who see insurance not just as a safety net, but as a broader financial strategy. Whole life, while a great product for legacy planning, has very fixed costs with limited room for flexibility. The premium, cash value, and death benefit don't change. Those are guaranteed. They don't increase over time. You're in this for the long haul, protecting both your family and your wealth. That's the thing about whole life insurance, all right? The 4 guarantees: death benefit, cash value, premium, and dividends. All right, so let's jump in to the black belt of life insurance policies. In my opinion, don't quote me on it, the index universal life, the IUL. It's for people who want flexibility and the potential for serious cash value growth, thanks to its link to the stock market performance. IUL combines the benefits of whole life with the potential for greater growth by tying the cash value to a stock index like the S&P 500. However, there's a cap on how much you can earn, but it also has a floor to protect against those losses. This makes it a great choice for those who want upside potential without the risk of losing their cash value if the market crashes. All right, let's talk about some ideal situations for IUL. For high income earners and entrepreneurs are financially savvy individuals in their 40s, 50s, and beyonds. If you're looking for an income producing product, this is the one for you. You're looking for tax efficient ways to grow your wealth and diversify your financial portfolios. Some pros for the IUL. Your goal is not only wealth protection, but also wealth accumulation and tax-advantaged retirement income. All right, let's hop into the cons, all right? The IUL has greater growth potential than whole life due to its index-linked cash value. It is more complex than other policies. So make sure you speak to a seasoned financial professional and an expert in IUL. It requires management because of changing premiums or cash value fluctuations. And IUL offers the most growth potential while maintaining a safety net. But it's definitely for those who are financially advanced and want a policy that adapts with them. How do you know which type of life insurance is right for you? Well, it really depends on where you're at in life and what your financial goals are. In your 20s or early 30s, term life might be the way to go if you're focused on building a foundation and protecting your family on a budget. All right, so you move on to your 30s to 50s. Whole life might be more appealing to you if you're financially established and looking for stable growth while ensuring long-term protection. If you're a high-income earner, an entrepreneur, or someone just nearing in retirement and just want another income-producing product, the IUL could be your best bet, allowing you to accumulate wealth with flexibility and tax benefits. Remember, life insurance is part of a broader financial strategy. It's about protecting what you build and planning for the future. And just like in Jiu-Jitsu, it's about having the right strategy for where you're at in the game. All right, guys, thanks for tuning into this episode of the BJJ Lender. I hope this breakdown helps you understand how whole life, term life, and IUL can fit into your game plan. If you've got questions or want to dive deeper, feel free to hit up your boy, all right? I'd love to hear from you. Like, subscribe, follow us on socials. It's the BJJ Lender all over TikTok, Instagram, YouTube. And don't forget, if you're looking for personal one-on-one consults, I'd love to connect with you for free. All right? So visit my page. As always, keep rolling, stay financially strong, and until next time, it's your boy Sham signing off. Holla.